So blockchain is an accounting system. Literally, it is just a system to account for a bunch of numbers and move those numbers securely from one person to another. How it does that is very interesting to the technical community, but less interesting to the holding community, to the user community, everybody outside the geeks. So I'm not going to talk about that. But what it does need to do is make sure that the accounting is secure.
A security token gives investors a share of the company's profit, because some blockchain companies take your money so that they can invest for you in other blockchain ventures. That is what we call a security token. You give them money and then you expect dividends at a certain period in time.
Somebody guess, how much money am I willing to guarantee that I'll return for making investments into crypto? 0. Not that I'm going to give back your million. You will give me that million and it could come back. It could come back as 2, or you could get nothing. If you're willing to take that gamble, then you're ready to put money into crypto. Because fundamentally, it will take a while for us to understand the things that govern the prices, if we ever do. We've heard of pump and dump schemes. I think those were mentioned. We've heard of volatility that comes from the fact that there's very, very little money. We've heard that there's no regulation as well, right? That was fantastic pointing out. So these are some of the things that make it extremely difficult for you to say that you're going to put everything and you're guaranteed a return. So if you're making this decision on what to invest in it, but be sure that it's money that you can afford to lose.
So how much am I going to win? And we will get to see that risk reward plays a huge part in the amount of profit that you're going to make. How does this apply? So let's say you're a trader and your risk reward, say I'm going to make this trade and I'm going to lose, let's say $30 or $3,000, and when I win, I'm going to make like double that. So in such a situation, you'll find that over time, even if you lose 5 out of 10 trades, at the end of the day, you'll still be profitable.
The authenticators are free, and Google Authenticator is as strong as they come. So you just adding this extra layer. Once you set up your account, if you go to the account settings, under your account, you'll see a slot for security. Just enable the authentication. Once you download the account, the app, you can easily link. There's some barcodes that you have to scan, then you can link it to your account. So anytime, whenever you log in, you'll still need to, after the username and password, you also need to input the two-factor authentication code. And this is a code that changes after every 10 seconds. So if someone, say, hacked your account, they have your username and password, they still can't get access to your account unless they also hack into your phone.